Vanakkam. In today's online class, we discuss something about piecemeal distribution. The difference between piecemeal distribution and dissolution is, in case of dissolution, we assume that the full amount of assets realized are received in lump sum amounts. That is, at one point of time, all the amount are realized. But in practice, it is not the case. Every asset is sold for a time duration. It takes a long time to realize the cash. So, practically, every portion of the amount is recovered by way of sale of assets. Now the question is, how to distribute the partial amount received by way of sale of assets? That is the question. Now, the meaning of piecemeal distribution. At the time of dissolution of firm, it is assumed that all the assets are realized and the liabilities are settled immediately. It is impossible to sell all the assets and settle the liabilities within a short period. In practice, the assets are realized one by one and the sale proceeds are recovered under several installments. Now the problem is how to distribute these installment amounts to settle our outside liabilities and partners' capital account. Let us see the accounting procedure for piecemeal distribution. First procedure is the cash in hand and cash at bank together with the first installment amount is used to pay only outside liabilities. If there are more than one liability, the available amount is to be distributed in liability ratio. For example, there is a creditor and bills payable. If creditors and bills payable are available in the problem, then the amount available, that is cash in hand and cash at bank, should be paid first to creditors and bills payable in their liability ratio. The balance amount available is used to settle the partner's loan account. If there is more than one loan account, the available amount is to be distributed in the respective loan ratio. If there are two partners' loan, then it should be distributed in their loan ratio. The entire amount due to partners' capital, like reserve and profit and loss account, should be added with capital before settling the partners' capital amount. If there is any amount kept in the liability side as a reserve or profit and loss account, that should be added with the capital account. After that only their capital account should be settled. Finally, the capital of the partners should be paid by using the insufficient amount available. So these are the procedure to be followed at the time of piecemeal distribution. First one, we have to pay the outside liability. Second one, we have to pay the partners' loan accounts. Third one, we pay the partners' capital account. For paying the capital account of partners, there are two methods. First one, surplus capital method or proportionate capital method. Second one, maximum loss method. In case of surplus capital or proportionate capital method, those partners who has more amount in capital per share should be paid first. For that purpose, we are calculating the surplus capital per share by way of using this table column. First column, partner's name. Second one, capital. Third one, ratio, profit sharing ratio. Fourth one, per share. That is, capital amount is divided by their ratio. Then we can have capital per share. Excess amount to be paid. This table is used to find out which partner's capital account and how much amount should be paid first. This capital account should be uniformly prepared for each and every amount to be settled. At last, when the capital per share of all the partners are equal, then the available amount should be paid in their profit sharing ratio. After that, we need not prepare this table. So this table is prepared up to the capital per share are equal. Second method is called maximum loss method. In maximum loss method, the maximum loss should be calculated. We assume that there will not be any further amount of realization. The first amount received is the final. Like that we assume. And if we give the first installment amount to partners, then how much will be the maximum loss? That maximum loss is calculated by using this formula. Total capital amount due minus cash available. This is the maximum loss. This maximum loss should be divided to all partners in their profit sharing ratio. Then the remaining amount is the amount of cash to be paid to partners. This is called a maximum loss method. We have to see a particular sum regarding the first method, surplus or proportionate capital method. RST and or share profits in the firm in the ratio of 1/2, 1/4 and 1/4. The ratio should be equalized, that is 2:1:1. That is the profit sharing ratio. On the date of dissolution, their balance sheet should as follows. There is one creditor, R's loan, S loan. So two types of loans. 3 partners capital account is there. Then cash in hand is available. The assets realized ₹45,000 which were received in installments of ₹15,000, 16,000 and 14,000. So 3 installments are received. Show how the proceeds should be distributed as and when received by following the proportionate capital method. First of all, we have to enter all the amount to this particular statements. That is, first one, amount available, particulars, creditors, loan account. Loan account is divided into 2 parts, R's loan and S loan. Capital accounts RST. So amount due should be recorded as per given in the balance sheets. Then cash in hand 1,000 rupees, that should be paid to creditors. After that, first installment 15,000, that amount is 9,000. Among the 15,000, 9,000 should be paid for cancelling creditors. So creditors account is fully settled. The remaining balance amount is 6,000. The 6,000 should be paid to partners loan account. Here there are 2 partners, so 6,000 is divided into 5:3 ratio. Balance to be paid. Second installment is 16,000. Among the 16,000, 2,000 should be paid for paying to partners loan in the ratio of 5:3. So partners capital account, partners loan account is settled. Now come to the partners capital account. 14,000 is available. The method followed is proportionate capital method. For that, we are going to prepare a statement. Partners name, capital, ratio, per share. 20,000 divided by 2 is equal to 10,000. 15,000 divided by 1 is equal to 15,000. 8,000 divided by 1 is equal to 8,000. Among the three capital per share, the least amount should not be paid. So 8,000. For that no money is given. So put dash dash dash. So T should not be given any amount. We have to compare the R capital account, R capital per share with the S capital per share. F is having 5,000 more than that of R. So excess amount column F 5,000 should be entered. Amount to be paid 5,000 because the capital per share is 1 into excess amount 5,000. So total amount 5,000. Amount to be paid 5,000. So 5,000 should be paid to S. Again come to the main statement. Amount due 14,000. Sorry, amount due 20,000, 15,000, 8,000. Amount available 14,000. So first 5,000 should be paid to S. After paying S amount, balance amount paid, balance amount due is 20,000, 10,000 and 8,000. Amount available is 9,000. For that again workings should be made. Partners capital account ratio per share. While seeing the per share capital of the partners, R and F are having same amount of capital, that is 10,000 rupees. Their capital per share is uniform for R and S. For T, 8,000 is having. So when compared with the R and F, T is having the less amount of share capital, that is the excess amount kept by R and F are 2,000 each. So excess amount 2,000 should be entered. The amount to be paid for R, 2,000 excess amount into ratio 2. So 4,000 should be paid to R, and for F 2,000 should be paid. So totally 6,000 should be paid. For that the main statement is balance amount 9,000. Among the 9,000, 6,000 is paid for R and S in the ratio R and F as rupees 4,000 and 2,000 respectively. After paying 6,000, balance amount 3,000 is there. Amount due to partners 16,000, 8,000 and 8,000. Again the statement is to be prepared. Workings is to be prepared. RST capital ratio per share. Per share for all the partners is 8,000. That is, all the partners capital per share are equal. If it is equal, then the amount available should be paid in profit sharing ratio to all partners. So remaining amount should be paid to all partners in their profit sharing ratio, that is 2:1:1. At last, the balance unpaid is 7,500, 3,750 and 3,750. This balance unpaid should be in their profit sharing ratio only. Then the next problem, it relates with the maximum loss method. LMN partners 3:2:1 ratio. Creditors is there, capital account is there, loan account, L and M, they are having loan. So asset side, cash balance is there. Assets realized as rupees 2001 January 25,000, February 45,000, March 45,000. They have also decided to distribute the cash among themselves piecemeal. Prepare the statement showing the distribution of cash. So this sum is solved under maximum loss method. Up to capital settlements, the procedure for both the methods are equal. That is, creditors amount and loan account of L and M should be paid as we already studied. So the procedure followed for settling outside liability and partners loan account are one and the same for both the methods. So up to settlement of partner's capital account, the remaining balance amount is 40,000. That amount is used for settling partner's capital account. While settling the partner's capital account, we are going to apply the maximum loss method. Maximum loss is equal to 55,000. It is calculated by way of adding 40,000, 30,000, 25,000, that is partner's capital amount due minus 40,000 cash available. So the remaining amount is 55,000. That should be divided to all partners in their profit sharing ratio. 27, so 3:2:1. 27,500, 18,333, 9,167. So that amount should be deducted from the amount due. Then the remaining amount is called cash paid. While we add all the cash paid, that is equal to 40,000. Then that amount should be paid, cash paid. Then the balance amount due. Again 27,500, 18,333, 9,167. Then the next installment, March installment, 45,000. Again we are going to calculate the maximum loss. The maximum loss is 10,000. That should be divided to all the partners. Then the amount is deducted from the last amount due. The remaining amount is 22,500, 15,000 and 7,500. They are called cash paid. Then the remaining balance amount 5,000, 3,333, 3,333, 1,667. This is the answer. This amount is equal to their profit sharing ratio. So this is called a maximum loss method. So for easy and useful understanding of these things, we apply the workings first and then we prepare the main statement. Thank you to one and all.